Yo, what's happening, ladies and gentlemen? Welcome to Volume 1 of the Vector Candle. Now, these videos are going to be designed at helping you understand the Vector Candle. You hear so many people talking about this Vector Candle story. What is a vector? What's that green candle on your chart, bro? What's that pink candle? What does the blue and the red mean? Look, let me put it to bed right now. This is going to be a series of videos that are going to help you understand how to read the vectors, okay? I'm going to give you the groundwork required so that when you see a green vector candle or a blue vector or red, you're going to have a good understanding on what's actually going on. So check this out. What is a green or red or blue vector candle? Well, let's start with what is a vector, okay? A vector candle is a big candlestick. Can be a small one, but we'll get to the classification of various sizes of vector candles because they do play their role. But the principle says that when we get a nice big single print of a vector candlestick, we know that something's going off. If it's green, it would imply that Mr. Market Maker is either hitting liquidation points whilst closing his longs and building shorts at the same time. Bro, how are you to understand what this candlestick means if all of those three instances are happening at the same time? Well, firstly, we need to understand what makes a vector candle become the vector candle. So quickly, you may have seen me do this before. Retail traders right here. Binance is right here. And market maker is right here. So when the retail trader says, I want to buy $100 worth of Bitcoin leveraged, he goes to Binance, he pings the order to Binance. Binance then pings the order over to Market Maker. Market Maker then returns that order back to Binance to give it to you. And Binance then charges you a limit fee or a market order. But what's going on inside of that? Well, we know this is a zero-sum game. And we know that Binance doesn't give you the capital. In other words, if you make money, Binance doesn't pay you. It comes from the liquidity provider. That's why they're called market makers. They make markets because they are liquidity providers. Binance is just the middleman. So when you go long for $100, Mr. Market Maker goes against your trade and goes short. Because when you go long, this is where your liquidation point is. And this is where your short liquidation is also up here. So whether it's a short or a long, Mr. Market Maker will go and set an order against you. Now, you can't afford to be in a drawdown for too long. That's why you've got a liquidation point. So whenever you marry up your position and you take a position in Bitcoin or for whatever asset you decide to trade, there is a margin requirement. And that margin comes up as an order, as a pending order in the charts. So that when you go long, this is where you get liquidated or wherever your stop is placed. Okay? Because when your stop is placed or whenever your liquidation order is hit, it's an active order that is being taken by Mr. Market Maker. Look at it like this. Price goes up. You're long. You are now in $100 worth of profit. But Mr. Market Maker has gone short against you. So he is negative $100. Now, if you're in a $100 position and you are profitable by $100, the only thing that's left for you to do is to take your profit. Because you can't be irrational, Mr. Market Maker can. He can be in a drawdown for as long as he needs to be because he knows where he's going to send price. Now let's take the scenario of if you are in a $100 long, but you're losing. So you went long here, and now price is going against you, and here is your liquidation point. So now your $100 trade is now minus $100, and if it gets to your liquidation point, the margin that you put up for that trade, let's say 150, okay, means that when you hit that point, your order's going to get closed. But remember, Mr. Market Maker is short against you. So if price does go against you and it comes down and hits your liquidation point, down here is an order that gets triggered. That order is a sell. That, for Mr. Market Maker, is a buy to cover. So when your liquidation of your long gets hit, Mr. Market Maker's short gets brought back because you sold and he buys back at the lower price from his short. So you're thinking, so why is that relevant to me? Because this is what constitutes the development of what a vector candle is, because a vector candle is what is happening to retail traders. It's where Mr. Market Maker is aggressively hitting the range because he is able to tap into traders' liquidation points and stops, because that's where most of them appeared inside this zone, inside this zone, inside this zone, and then again at this point. But behind these zones that are being taken, Mr. Market Maker is setting orders at the same time. You see, as I said to you before, he does three things. He's either building shorts, closing longs, okay, and hitting liquidation points at the same time. So which one is it? Well, we only know that by the way he moves price in terms of vectors. So let's just look at Bitcoin for a minute earlier on the 1 hour time frame. Check this out. You've got a big blue vector candle appearing above the key 23,250, above the 23,000 zone, and try to make it up towards the 23,500 area, but not successful at that. When I saw this play happening by Bitcoin, I was getting ready to run the short. I wanted to wait and see if Bitcoin could actually roll over from that point, because it's starting to show the behavior of doing this. Look, blue vector candles pushing price up, comes above, tries to move towards the 50 EMA, and then rips back down again. Does it again in Asia, initiates a stop hunt rise, and then rips it back down again. Price then starts moving up with Bitcoin, and it keeps on going up. The dollar index at this point in time was going higher, and Euro USD was actually dropping, but Bitcoin was moving up. And what do you hear me say? Bitcoin's last to move. Going into the smaller time frames, I can see that I've got a collection of vector candles. Where is it? 5 minute time frame. Here we go. Mr. Market Maker's liquidating shorts. He's hitting the shorts. He's realizing a return. He's buying. He's now hitting the short liquidations by closing into his longs that he had built in the previous move over here, because he builds his longs when price is dropping. He closes his longs, but he also builds shorts at the same time, because traders are coming into the chart and buying and buying. And what happens when someone buys? Someone is selling. And that's what makes a vector candle. It's the engagement between buyer and seller, and how much of them are there happening at a particular point in the chart. So we see these green vector candles appearing, and we say to ourselves, okay then, if Mr. Market Maker is trying to run his shorts from this area, what would give us a reason to believe that he's going to come down? Now, this is where we start taking into other considerations of the hybrid system, okay, where we're talking about deviations away from the 50 EMA, and where we've got certain stopping volume candle principles for 5 and 13 EMA strategy. Right, there's a plethora of strategies that you can apply with the hybrid system, and this is something that I talk about with the patrons, with the masterclasses. We've got whole and half number strategy, learn the hybrid, how much of the candle will you take, Heikin-Ashi scalping strategy, how to trade the daily open, when is a retrace a continuation. We talk about various strategies inside of the hybrid system, but I'm giving you a basic strategy with the vector candles. So with this green vector candle principle, I know that Mr. Market Maker is trying to move price higher. And he's doing that because he's doing it at speed. So the clue for you guys is when you see a green vector candle appearing, there's something happening. Mr. Market Maker is running liquidity. He's hitting traders' previous stops. So the guys who went short over here are paying the price because they didn't take any profit when price moved all the way down here. And Mr. Market Maker made his presence known with the red vector candles, where he was marking price down lower to encourage traders to go short so he can go long, because when you go short, what happens? Someone goes long. And we know retail trader ain't going long when price is dropping. If you have the understanding of the hybrid system and the market maker approach, you go long at the lowest point. Is that not what they do? Is that not what happens in economics? You buy low and then you sell high. You don't buy an investment and anticipate to sell it at a lower price. No, you wait for it to go up. Now, of course, given certain circumstances, if you have to get rid of it because of certain situations, fine, that's a different story. You've got no choice. But if you had the opportunity to hold on to an investment and wait for it to increase in value, are you going to close it at a loss? Are you going to close it at the lowest point? No, you're not. So why do retail traders buy at the highest point? We get clues of that through the market maker's principle of the vector candles. So whether you see green vector candles appearing at the highs or you see red vector candles appearing at the lows, When price is rising and you see a green vector, it means Mr. Market Maker's preparing to run shorts. When you see a green vector candle appearing a red vector candle appearing at the lows, you know he's marking down the retail traders to go short so that he can go long at the lowest possible point. Here's an exercise for you, ladies and gentlemen. Go in the charts and take every red vector candle and green vector candle and marry them up. See if you can find if they match up. So there's an example. Red vector candle, go right, and you see it comes up and gets recovered. Red vector candle, go right, see it gets recovered. Go back in the charts, guys, and see if you can see that principle happening. It doesn't always have to be recovered by a green vector candle. The green vector candle just tells you that they're getting ready to just run up and recover the vectors, the recovery of the previous candlesticks at speed. That's all it means, okay? So like, look at this. You've got a violet vector candle right here. You go across, it gets recovered right here. And then, of course, the green vector candle comes up and recovers this zone, which inside of this zone was a vector candle on the smaller time frame. So if I actually come up here and mark off this point right here, so let me just get the arrow. This there is a vector candle. How do we know it's a vector candle? I hope. There it is. How do we know that's a vector candle? There it is. And this is a strategy that I'll be talking about and introducing to you guys soon. How to look at a chart like this and know what is a vector candle without having the indicators. That's when we start coming into understanding the actual structure of a candlestick. You see, retail trader looks at that and says, that's a big bullish candlestick. I look at it and say, that's a bag of shorts that have just been opened by trapping the retail trader into the belief that price is going to go higher. But what they're doing is they are actively engaging in hitting liquidations on the retail traders who went short over here. Oh, let's just take the chart that we're looking at right now. We're looking at Euro USD. Let's take the chart and understand the principle. You know what? I'm just going to go back in the chart as far as I can and show you points of vectors. So here we go. What point is this? This was on the 23rd of June. Green vector candle presence right here. Well, I haven't got the indicators in front of me. Okay? I've just gone to a random point in the chart. I'll keep going. I'll keep going. I don't care whatever it is. Don't care. I have no idea where I'm going. I'm going to pull off a vector candle without using the hybrid system. This looks like a vector candle. This looks like a stopping volume candle. This looks like a red vector candle. So let's go take this into TradingView and see if there are vector candles behind it. Let's see. Hold on. Okay. So we've just pulled a random point in the chart. All right? And if you think I've actually looked at it beforehand, I'll disprove that in a minute. Look, this is a green vector candle. This we said was a stopping volume candle. And then we said this was going to be a red vector candle. All right? This is without the indicators. Look down. May the 4th. TradingView. May the 4th. Green vector candle. Stopping volume candle. Red vector candle. How did we know? Don't believe me? Let's go back. Let's keep going back. Keep going back. Random point in the chart. Random point. I have no idea. I'm not stopping. I have no idea wherever I'm going to go. Go back all the way to December. Let's go to December, ladies and gentlemen. Okay? So what have we got here?